Yeah,
Thank
so
you very
it is
much.
starting now, yeah. Okay, it's on now.
Okay, thank you very much for today's workshop for Pilot 4. As Pablo announced already, the agenda, which you anyway also have seen in your invitation. I would like to just give a quick overview what was the original target of the pilot and how the solutioning setup was created. And then my colleagues from Privé and also from our partners, Report, Brain and Atos, will show what is the current status right now, as we are, I think, nearly right now in the middle of the work which was supposed to be done. Next slide, please, Pablo. The major goal of the whole pilot was always, in the end, to develop and adapt a classical wealth management platform, which is Privé Managers, with an optimization algorithm for to be used for the broader masses. Yeah? Because we all know that in the end, retail or mass affluent clients, as always they are mentioned, mostly have no access to investment portfolio optimization tools that you normally only have if you have at least, I don't know, 250,000 euro on the table, and then private bankers will address you with their recommendations. Yeah. Second task here was to make this, in many cases, quite complex portfolio optimization tools also accessible for those people where there is not time to make a portfolio optimization process for which takes 1 week or similar. Yeah? And in general, and that's a global issue, that's not only European-wide, we all have to admit that less than 30% of all assets worldwide are managed professionally, meaning either by advisors or by professional asset managers or by classical banks or insurance companies. Yeah, that's the, let's say, that's the framework where we are working for. Yeah, next slide, please. And for that, we wanted to have, on the one hand side, the advisors enabled to focus again on the customer handling, the customer advisory, and not so much as it is right now with regulatory staff filling in forms and making all these KYC processes, as they are called, and so on. Yeah? And that's let's say the target for the solutioning. Yeah? Of course, in a high-tech approach, which is shown here on the left-hand side of the slide, that we really try to have this completely automized in the end, yeah, that you have a seamless user journey where you can click through, and you will see later on some of the journeys where in the end advisors can go either together with their customers or even in a kind of a self-directed journey. The customer alone goes through and gets directed from step to step from his customer, know your customer principles, identification, down to risk profiling, and then, of course, to the portfolio construction. And this is the overall. Here we have also two of the pilot partners in the workshop today. We firstly want to thank both of them that they also can participate today, where we then added some additional features within the pilot, potentially then provided by these partners. Yeah. And the main goal for, let's say, the proof of concept here, and of course for the further work, is to show how the optimization process and the algorithm would work, and how inputs from advisors or from their retail customers can be put into the overall process. Thank you. Pablo, I think then it's your turn. Oh no, that's still my turn. The genetic optimization, as we call it, should create flexibility and should enable flexibility in portfolio construction, because all the people who are working in financial services industry, we know all the different models from Markowitz, from value at risk, whatever, and that's all optimization models. Yeah? But the idea here is to combine any kind of optimization modeling, yeah, where my colleagues later on will explain a bit more, together with personal preferences of the customers, where the customer can say, with this portion of my portfolio, I want to get higher, I want to take higher risk. With another portion, I want to take less risk because that's what I need for my life, and so on. And the same is for other, let's say, thematic investment approaches, where we see all now in the industry, the discussion about ESG, sustainability, global impact factors, and so on. This is ongoing, and this is also to be taken in mind when we start here. Yeah, that was it from my side. Happy to answer any question about the overall goal for the pilot, but for now I would ask then Pablo to continue with the user journey first, and then we go down to the different tools. Thank you very much.
Okay, thank you, Roland. So yeah, so for this part, maybe I will make the demo, and if there are no questions for this first part, let us move on. And then feel free to raise any questions if you like, because in the end, we are on a smaller round today. So yeah, we can make this more interactive as we don't have as many people as expected right now. So first of all, let me make a quick summary of what we're going to show you today. Okay, so here you can see the goal for this journey is to generate a risk profiling and user preferences assessment of a investor or potential investor to get a proposed portfolio. So basically, as you can see here on the lower side of the slide, once we start the user journey and the client enters the system, and let me clarify here, with client, we will mean usually a investor, but it could be that a advisor just fills in this formula, so to speak, to generate a proposed portfolio for his or her clients, which will be in the end investors. So as you can see, one of the first parts of the journey is the risk profiling questionnaire. Here we're going to see how, based on some questions, we generate a risk assessment and risk profile of the investor. On the second part, we basically try to gather up the investment preferences of the investor based on some factors. And thirdly, we will move basically to a optimization process where, based on these inputs, we generate an output, and then we basically can generate a final proposal to the client. Okay, so then let me just quickly share my screen. So. Okay, you shall be able to see my screen now. So what I'm sharing is basically the journey that I've been talking about. We are preparing this front end to be integrated with our backend currently. So this is, bear in mind, this is a demo version, and this is not 100% complete. So yeah, but just for the purpose of this presentation, right? So as I said at the beginning, we will click here in Jess, and we want to create a risk assessment or risk profile. And basically, as you can see here, we have several questions for this. I'm going to explain a little bit each question. So basically, here or let me take a step back. So basically, each question is defined by the client. So in this case, could be a bank or an insurance company that wants to create a risk profiling for their clients, and each weighting of each question is provided by the client, and even each question. So these are examples that we have, but just so that you know that we could have, instead of 10, then 20 questions or 7 questions, and each of them could be customized. And in the end, for us, it's just a matter of setting up the weightings in the backend so that we can create this risk profiling, basically. So as you can see here, the first question is regarding the policy terms. We could see now up to 30 years, for example. The next one is around the frequent contribution or one-time payment. sort of profile. So we could say, okay, I will have a monthly contributions, or I will make just one-time payment for this investment. So let me put here one-time payment, for example. Then if I go to next, the system asks us, okay, regarding wealth, and we have 3 questions here. One of them is, how much do you want to contribute as one-time payment? We could make like 3,000 euros. Then the second question is around, how much are your capital assets? We could make, for the purpose of the explanation, we make 35,000 euros, for example. And then how much is your real estate wealth minus respective loans? We could make also 200,000 euros, for example. I go to next. So basically here we're trying to assess the current investor's wealth to further in the journey assess the risk exposure based on current wealth. So let me see. It's blocked right now. Let me go back. Okay, so yeah, so as I said, let me put here frequent contribution. Let me see, because basically this is a demo version. I will put 3,000 as a, or let me put like this, so 500 euros as monthly contribution, and then free available income on a monthly basis will make 3,000. I'll click the next. Yeah, so as a fourth question, we want to assess the client's experience regarding several asset classes. So we can basically select, okay, I'm experienced with fixed income products and ETFs, and equity or equity funds, and I see commodities. I'm not very familiar with commodities or money market sort of investments. And then we click to next. This question basically tries to assess the risk profile and the risk aversion, so to speak, of the client. So as you can see here in this chart, we have a risk return related chart where we show 4 different portfolios, and each one has a different performance, as you can see. And basically the dark green line is 100% stocks, and the dark blue is basically almost 100% bonds. And then we have some in-between weightings. And what we're trying to assess is how much return the client will be comfortable with based on the risk that is implied, basically, with the implied volatility of the portfolio. So you can see here, for example, I could say, this has a lot of drawdown here. This one is smaller, but I would like to have more returns than this dark blue. So I would select maybe the light green. So I will select this, and then the system will say, okay, if you're comfortable with this, then this will be 70% equity globally, and then 30% fixed income globally. So this is a matter. This is just an example, but obviously we could configure these weightings as well. So if I click to next now, we have the same type of question, but instead of for the returns and the expected returns, but for the drawdown. So as you can see here, this is an example of the 2008 to 2009 financial crisis, and you can see here we have several drawdowns based on the asset allocation. So this one, obviously the one that has highest, you can see here, highest exposure in bonds has a smaller drawdown, and the one that's exposed to 100% equities has the biggest drawdown with almost, well, actually something around 50%. So I could come here and say, we'll be comfortable maybe with this drawdown, with this light blue one. And then the system will say, okay, this is 40% equities globally and 60% fixed income. So what the system basically will do based on the last questions and these last two, we'll try to assess what would be the optimum asset allocation based on the risk profile after that. So now if I click to next, we have another risk return related question where we could assess, okay, if we have a more defensive profile where our drawdown is lower, but also our return will be smaller, or if we are more a sort of a offensive investor, so to speak, where our drawdown may be bigger, but obviously also our returns potentially will be bigger too. So I will click here and moderate, for example. Then the next question is something around also sort of behavioral finance questions where we say, okay, based on the portfolio volatility, as you can see here, the accepted fluctuation of the portfolio, we could have a bigger return, but obviously a bigger fluctuation on our portfolio, or a smaller return. But then, although our performance will be lower, the volatility of the portfolio would be smaller too. So we'll select here that I'm comfortable with a lower volatility. I click to next, and I say, okay, in order to achieve a high return, temporary fluctuations in value must be accepted. So losses at expiration are also possible. So the question is another behavioral finance related questions where we try to assess how the client or the investor will respond if we happen to have a loss. So how will you feel if you today check your portfolio and you have a loss? So this will make me nervous, will make me anxious, or maybe I'm familiar with it and I know it's part of the game. So if I say I'm familiar with it, it's part of the game. So basically this question will say, your risk appetite basically is bigger than for the person that says, it makes me nervous. I want to have the lower volatility as possible and the lower fluctuations as possible in my portfolio. So let me select this one, and then I'll go to next, and we have another similar question where we say, assume that you have 10,000 euro invested in funds, and your value dropped to 8,500. So you have a drawdown of something around 15%. So how would you react? So will you panic and sell all funds? Will you feel worried and reduce your investment? Or maybe that the volatility is normal and you accept this, or you actually go and take the opportunity to buy additional funds. So this also tries to assess your risk appetite, basically. So if I take interim volatility as normal to me and I click to next, basically now what the system will do is based on these 10 questions, we will generate a risk profile. So if I click now to next, in this example, we linked the risk score to a target volatility of the portfolio, as you can see here, based on 5-year averages. So based on the questions that we answered, we have a risk score of 4 over 5. And as you can see here, this is basically the lower start of the risk score 4, which is something around 12.8% volatility. So this will be basically our target volatility for our optimization process that we will explain later on for our optimizer. So if I click now to select my product and I say that I'm an active client, so here, what we want to show is how we could make a investment preference assessment or selection for one investor. So basically, as you can see here, we added 3 questions in this regard. We could obviously, as for the risk profiling, we could base these questions on the client's or the bank or the insurance company preferences, and then add more or less questions that will act as well as an input for the optimization process to generate a portfolio at the end of the journey. But for the purpose of this presentation, we selected 3 questions. One of them, very common topic these days around sustainability and ESG. So basically, this question tries to assess if the client would like to have a neutral sort of impact on the desired portfolio weightings in regards to a ESG investments, or if you would like to definitely have ESG factor, or actually we could say, I would like to have a 100% sustainable portfolio. So this will mean when we trigger the optimization process, basically, the client will say, I want to have that. I want that all my investments are ESG compliant. So basically, as you can see here, we have an explanation. Some of you is not familiar with this, like environment, social, and governance responsible sort of investments. So if I click to preferred, I go to next, and then I get another question. And this one tells us how much of your portfolio would you like to be invested in ETFs? So would you like to have some, apart from your stocks and bonds exposure, would you also like to be invested in ETFs? So because this is also a common theme right now, where ETFs have usually very low costs, where you can actually you can invest in some basket of assets based on with a exchange traded fund. So basically, this is another question, and maybe the client says, if it's possible, I would like to be invested in some ETFs. So if I click to next, I get a third question, and this question regards to basically the themes, or the sectors, or the basically the sort of exposure that the client would like to have for his or her portfolio. So we could say, based on my risk profiling and my preferences, I actually would like to be exposed to technology, because I know this is a very common theme right now. I believe that it could have higher returns in the next couple of years. So I could say the same for health. So we are basically now in this pandemic situation, and I believe the health stocks could have higher returns the next year. So I could select health, and then I would like to be invested in some environment protection sort of assets. So I could select also this theme. So if I click to next, now we get a summary. So here we basically show the client, okay, this is what you selected. You would like to be as a preferred choice, a portfolio that's invested in more sustainable funds, so ESG sort of investments. The same for ETFs. If it's possible, based on your risk profiling, you would like to be invested in ETFs. And thirdly, these are your preferred sort of sectors where you would like to be invested in. So environmental protection sort of assets, and then health and technology industries. So this is basically the end of the journey. Once I click here, show me my optimized portfolio, the system will get both the risk score, so basically the target volatility of your portfolio, plus the investment preferences. Based on a set investment universe, we will create a portfolio proposal. So if I click here to next, as you can see here, now we triggered already the optimization process that we will explain later on in more detail, and we actually got a proposed portfolio. So as you can see here, our target volatility, if you recall, it was 12.8%. So basically, the system generated a portfolio which is a little bit lower, but that's fine. So we have this in the settings that we basically generate. The target volatility shall be our maximum volatility. We have 12.68%, of a 5-year average. This is the expected return. So based on historical data, we have 16.3% as an annualized return on the last 5 years. And we have our risk score of 4. So you can see here the portfolio performance on the last 5 years. We could actually switch between the last years to see how this would have performed. And basically here we get the investments that the system generated as a target allocation. So you can see here, as we selected ETFs, we have some ETFs here, and we have several investments. As you can see here, based on our preferences, actually we got some ETF which is socially responsible. We got some ETF that's invested in healthcare. You can see here another for global climate, environment, and so on. So yeah, so I think, I hope you get the idea. So now I would like to maybe dedicate this time for questions. So are there any questions, regarding the risk assessment, the preferences selection, anything that's not clear, or maybe around the journey? We'll be happy to answer this.
Okay. No, yes, if there is no question so far, potentially the question from Jose about the theme settings could be now answered, because the other two, Julian, who is the presenter for the AI part, or for the optimization part anyway, will go into more detail. I think for the themes, we always need to take into account that's exactly as you described. The investors do not know if health or infrastructure is good or bad for your portfolio. And to be honest, it's then still the question which products you select. There will be good infrastructure products, and there will be products about infrastructure theme which are not performing that well, or having higher volatility because other markets. And therefore, at this time of the process, also in the typical advisory process, it's more or less that the customer can personalize his portfolio. And if he is with his selected themes then satisfied, then he can stay with the selection. If, for example, the performance or the volatility is much too high, or the performance is much too low, what he has expected, then he can restart the process again and select other themes to see if a selection of other themes where he would be interested would lead to better results. And this is exactly how the advisory process also in the end with the classical financial advisors right now is, let's say, is performing. Because we know everybody is now talking about ESG, or to take another topic, everybody is now talking about crypto assets. But nobody knows exactly what does this within my portfolio. And therefore, the tool shall be constructed that you can just try. Because the whole process right now, you don't have to decide. You just get a proposed portfolio, and if you're satisfied, you can go and say yes, accept, and please invest. Or if you're not satisfied, you can say no, make another process and select some other preferences, and then let's see if this is more satisfying for me. This is just for the philosophy of the whole advisory process. I hope this answers a little bit also your question.
Yeah. It's clear. Yes, it's more that this part is, as you said, you are. Sorry, I don't know. You hear me? Okay.
Yes, we can hear you, Jose.
Okay.
Perfect.
So yeah, this part, well, it's like the name says, is that you are customizing the themes that you want to use. Maybe you want to invest more in health because now you are very aware of the things that are happening, and you prefer to invest in products related to health. Or maybe because I am a technological guy, I think that technology is very important, so I prefer to select this. And then you will see, and then you will have to finally decide if the final risk is okay for you.
Exactly. Perfect.
No, it's very good. So, and do you estimate, or do you have in mind how long it will take to do a whole process of this with each client? Do you have a limit, or is this something that you have in mind?
Mm. To be honest, I think we did not have a limit normally in mind. Normally, let's say these kind of processes always will take around 5 to 10 minutes. And then it's the discussion phase between advisor and end client, yeah, because then exactly this starts that the end client says, okay, volatility is too high, I'm a little bit nervous, can we reduce risk? Then you go back and reduce a little bit the risk profile and say, okay, I'm not so aggressive, I'm more moderate, and then want to bring down volatility, and then you get another proposal. Yeah? But that's exactly the next steps we will do to have then also two proposals compared. Yeah. That we have your first proposal, and then if you change something, you have your second proposal. And for both proposals, then the different figures, which we will see now, will be calculated, and then the advisor can sit down with the customer. Is proposal 1 or proposal 2 the better one, or shall we make proposal 3? Yeah, that's exactly, let's say, how the tool should work then in daily business. Yeah.
Okay, thank you.
Okay, perfect. Great. If there is no further immediate question, then potentially, Pablo, we can go ahead. Yeah.
Yeah, so let me change the screen. Okay, so I believe now we plan to make this part regarding the news article sentiment analysis that Report Brain is doing for INFINITECH. So maybe I will hand over to you, Alex.
Yeah, by all means. Are you going to go through the slides one by one, or?
Yeah, so if you like,
Yeah.
I can share, and you let me know when I switch
Sure.
the slides, or you can also share the screen if you like, if you have something prepared.
Let me start by saying thank you for being here and, looking into the work done on this pilot. Now, the general idea behind news article sentiment analysis is that the news articles are pretty much an independent stream of information from any other financial related stream of information. So as we saw before, there is an extremely detailed and beautiful work done in terms of profiling the potential investor, in terms of risk appetite and risk aversiveness, areas of interests and more. However, what is the overall sentiment against specific underlying assets that are floating around in the market? And that's where the news article sentiment analysis is coming in. Next slide, please. So the idea here is, as I said, to understand what the market feels, what are people saying that around specific assets, those being equity related, those being debt related, those being a mix of both, and so on. We tend to have pretty much a good view of what's happening to listed assets. However, this could be utilized for non-listed assets, where yes, there is a sentiment, but the visibility of what's happening specifically to that asset is not very clear. So the news article sentiment can probably provide some insights on areas that would be the mid-market, where it's not so clear what is going on because we don't have real-time streams of information to compare them against other streams of information. Next slide, please. So we put together a system where we are currently in version 1, And what it does is we have already been collecting millions of articles per day, and we are currently processing about thousands of words per second. And we store that information, and we build around that an API that, upon calling, it goes through a sentiment analysis on the fly and delivers back a response. So the user is actually making a call on a specific underlying asset. And if there is information on the news globally about that asset, the information is analyzed on the fly, and then an aggregate response is returned. So that return is incorporated further down to other systems and combined with other financial or non-financial resources to provide, a recommendation, and so on and so forth. So this is exactly where we stand today. And this is running on the development environment. And we're working on the version 2 of this. Next slide, please. Where we add a lot of information that will make it more accurate. So as you understand, we're talking here about unstructured information, and there is some kind of subjectiveness on how that information is becoming positive, negative, and so on and so forth. To have a clear vision or a clear understanding of that, we're playing with big numbers theory, where the more information we have, the clearer we get about the sentiment around an underlying asset, meaning that any errors that are potentially done during an analysis are pushed out to the borders of the curve, and we're focusing on the main return out of it. So being specific, even in low numbers, even in low availability of information, is becoming more and more important, and that's where we're working on. So what we are doing is those 2 million articles per day, we are breaking all that down to word by word and relation between words, so that not only do we understand what the sentiment of the overall article is, but the sentiment specific to the assets inside it. Let me give you an example to make it clearer. Let's assume there's an article that refers to two shares, two companies, two equities. So, and that article says, share 1 is absolutely beautiful, it's going to be performing very well, and we feel strong about it. And then down the line, it says that, but share number 2, is going to go down the drain. So, what is the article sentiment going to tell us? It's not going to tell us anything. It's going to become neutral, because +1 - 1 gets to 0. But the information inside the article is not that. We have a +1 for equity 1, and we have a -1 for equity 2. There are more complicated articles where the more equities spoken about inside an article. And what we're currently working on is breaking all that down, understanding what is the interrelation between words and equities and other underlying assets, so that no matter what and how many underlying assets are referred within a piece of text, the specific sentiment is coming out and returned to the user around the specific thing he wanted. That is going to help and minimize the error and make the whole stream of information, more valuable. Another thing about the stream of information on sentiment about the news is that is orthocanonical, is completely independent to the financial related information, and it does have a predictability potential, given the fact that there is enough analysis and models built around that source. So this is what we're going, and this is where we stand right now. Next slide, please. So what it's done is, as you understand, we're talking about huge streams of information of multiple tenths of servers, running this currently. And what we're trying to do is make it as much as fault tolerant as possible, run it on multiple servers where, the jobs, not the tasks, the jobs are broken down into multiple servers, and always having focus to be able to scale out, not up, meaning that if the stream of information increases for some reason, we are able to scale out, increase our capability and throughput by just putting more machines, more equipment into the platform itself. So that's more or less it. Happy to take any questions if you want. There's a next slide, I think, about benefits, right? Yeah, I think pretty much described that. So, the benefits are all the information is adjustable right now, and it's near real-time sentiment tracking, and the focus on important assets related with portfolio of its partner is one of the variables that it's already undertaking. So this is pretty much flexible. So if customer one is focusing, as we saw before, on green energy and technology and infrastructure, we are able to provide information to those specific areas that the specific customer is interested in, and nothing more. That's it, right? Yeah, that's me. Happy to take any questions.
Okay, thank you very much, Alexander.
Yeah.
Maybe for the next
question, maybe. Yeah, so Julian.
Yeah, I will share my screen for the next part, Pablo, while you take question.
Sorry?
I will share my screen for the next part. It's easier.
Yeah. Maybe just, Alexander, just quick question. When you are referring to NLP, is it natural language processing? So is it?
Yes, it is. Sorry for abbreviating that. Yes, it refers to natural language processing.
Okay. And is this done in English, or which do you have several?
Yeah, that's a good question. So we are currently, we're able to. We've built around 300. We're covering. So the NLP process for an article is broken down to different tasks, right? And some of those are specific to each language. So the first thing you do is to understand what language the article is written in, and that we can do in about 385 spoken languages, if I am correct. So we break it down, and then we route it to the appropriate, let's say, set of tasks. Now, there are specific tasks there, like entity recognition and so on and so forth, that we're putting some work to make them language agnostic. And by being able to do that with a pretty good accuracy, we will be able to, provide that in any language. Now, having said that, there is a good, we already have a good number of those models being built for a good part of those languages. So the short answer is that for major languages, we are going to be able to provide that analysis too. So, let's say top 10 or top 15 languages is spoken in the world. We're going to be able to provide that. I don't know if we're going to be able to provide it for all the 380 languages, but I can tell you that it's going to be available for those top 15 languages, and that's something which is as has been described to us, the INFINITECH way. It goes well beyond the scope of work, but it's very, very attractive, and we are currently working on it. And I think on the INFINITECH project, it's gonna help the end result, which is placing this to some kind of market or whatever.
I had a question on that. Did you have any kind of analysis on the correlation or relationship between sentiment and trading performance?
We are not doing that. That lays on the hand of specialists like Privé. So we provide the specific stream of information. Privé already has streams of other any other financial partner has already those streams of information. It lays upon them to correlate it.
Okay, thanks.
Okay, and that's interesting. And just a quick question, Alex. So if you basically, let's assume you identify 10 languages, and then do you use some sort of translation tool where you translate all these languages in one basis, and then you analyze based on one language?
That would be we have discussed that approach internally. That would require a farm of graphics intensive CPU servers, because you need to run all the base, let's say you translated everything in English, right? And then you run all the stuff there, and then you translate it back to the original language, right? But what is the accuracy you're going to get there? See, that is a question. Yes, the answer is yes, you can do that. You're going to miss out a lot of stuff, and the accuracy you're going to get is not going to be so great. So you can use that approach to correlate and do things in a cross-lingual type of approach, but you cannot use it for everything. So the answer is not very clear. Specific for the financial industry, I personally wouldn't go down that road.
Yeah, I understand. So what makes it, what makes sense is that you have some sort of keywords for each language, and you work with those.
Yeah, I mean, it makes sense to play around with models and data science, playing around on the specific language that rather than utilizing generic stuff that you translate in one language and then you get it back. Let me give you an example. Privé is named Privé, and you have a German article speaking about Privé. Then you translate it in English. Privé is a good name, but it's gonna probably be translated in English as private. And then you run entity recognition on that translated article. Odds are that it's going to miss the entity named Privé, because in English it's going to become private, it's going to become part of a sentence, so it's going to miss it out. So you are increasing the error there. Yes, you're going to get some results, but it's not so good.
Yeah, understood. Yeah, makes sense. Okay, yeah, thanks, Alexander. So that's it from my side.
No problem.
Okay, so if there are no more questions, let us move to the next part. And here, Julian and Petrus will explain our algorithm development status for the optimization process.
Okay, can I share my screen, Pablo?
Sure.
Okay. Okay. So hi everyone. So there will be this part will last about 40 minutes. There will be two parts. First part is more about the theory, the principle, and the methodology to give you a bit an intuition of our approach, and especially clarify the concept of Robo Advisor and AI in portfolio construction, because there's quite a few different lingo in the market and a lot of, I would say, confusion or different approach. So we want to clarify in which approach we are set up. And after, Pratush will demo how our API works using a Google Sheet. That API is available for our partner for testing. To show you on practical example how this works and how it can be used. Please don't hesitate to interrupt with any question. I'll try to handle them during the presentation. So maybe I'll cover some of the questions raised before about our approach and where we are in optimization or AI for portfolio, and I'll add some anecdote around it. So the first one is, it was when I was with Bruno Dupier, he's a French quant, quite famous on the derivative business because he's created the local vol model like 15, 20 years ago. That's the most used in banking to price derivative. And we were both visiting a prop trader of a big Swiss bank a few years ago. And the question of the prop trader was, well, does AI make money? You know, do you try AI? Does it help to make money? And Bruno said, well, we tried 20 years ago when I was doing research. Doesn't work very well. And the prop trader smiled and said, yeah, we tried to, it doesn't work. The consequence of that, we're not trying to make money. We're not trying to have an AI using big data and suddenly we beat the market with money. People have been trying for 10, 20 years. The concept are the same, just now there's more data. At the moment, I talked to quite a few colleagues who are in different projects where they're asked by the management to use AI to make money. And unfortunately, it's not working very well. And we can talk about that. But the idea is not really our positioning. And also, if we had an AI to make money, we would not be here. We will all be retired on the beach and just printing money through our AI. So anyone who say my AI can beat the market is marketing illusion. I would say it like that. That's the reality where we are. Our approach is different. Our approach say, well, predicting the market and predicting the future, and that's about that topic. When you do investment, you say, look, I put my money in a project, in a company, I expect in the future I will make money. It's predicting, having a view about the future, and no one knows what's going on in the future. That's what I learned when I was trading stocks, is you can't predict what's going to happen. So everyone, based on certain information, their own stories, their experience, is going to make during investment decision some view about the future explicitly or implicitly. What we're doing in our approach is capturing this view through a first modelization of the way an investor make decision. So that's what Pablo showed you, to include a lot of data available in the market. So for instance, the sentiment from Report Brain, and then automatize the portfolio construction based on this information. And I'll give you an example. Let's say we go in holiday and we need to book a hotel. And when we book an hotel, if you think a little bit, we are going to predict when we go on holiday our experience in the hotel. It's a prediction in the future of our experience in the hotel because we've never been there. So when we look at the hotel website booking, we have this information. And the first step, we look at this score, like cleanliness, location, service. And in fact, here, there's a first modelization. For instance, the cleanliness score, you put a number to what is clean, a room is clean, how a hotel is clean, is a simplification. So there is a first modelization, and sometimes in finance, we forget this step, is when we look at volatility, return, Sharpe ratio, there's always modelization of what is a good volatility. And the reality, for instance, volatility is not the same for each type of investor. So the first step is modelizing through a numerical representation the status of your hotel room, like you would do for a portfolio. And then in most websites, they will show you an average score of this hotel. But the reality is not really as each individual do it. When I go to my hotel, in my case, I care a lot about comfort and value. I don't really care about service. I don't really care about location. So my actual implicit score is like 6.9. Another person may care really much about location, a bit about clean, and that's about it. And their score will be different. So when we make a decision, the way we look at that, at data to make our vision about the future is very personal. It's not something unified. Everyone has his own perception of the future. So in the following, the first part, we call it fitness function. That's the first modelization of what is a good portfolio. The score is between, in our case, between 0 and 1. 0 is bad, 1 is the best score. The lower part for the fitness function weight are also parameters used to personalize the portfolio construction to each individual investor. And then the total score, that's built as an average weighted value of each fitness function. The lower part typically will be coming from all the question KYC Pablo showed earlier, where we ask question an investor, and I think there was a question about what does an investor say when, well, I care about a theme. They don't really know. So we need to ask them question to be able to do kind of modelization of what an investor say by, I like ESG. So there is a first step that's customized by banks. Each bank has their own policy around it, maybe based on some regulatory requirement on how to modelize a portfolio as an ESG. So what we see now in the market, for instance, for ESG, is a lots of different company provided ESG score on assets, and from there we can calculate to portfolio level. But I insist that that's already a modelization, and even this modelization, the bank will depend each financial institution using this kind of tool. Okay. So we're not predicting the future, and I go back to that. So we're not using big data when we have an AI working, learning, and suddenly making money. It's absolutely not our approach. What we're doing is collecting data to modelize an investor decision making, and then use our AI or genetic algorithm to quickly build a portfolio. What an investor would do, or a relationship manager would generally do by hand when you take a stock, look at the volatility, add another stock, another fund, look at the allocation, and so on. And this process can take several hours. We can personalize the experience or modelize the investor way of looking at the future through two different ways. One is on the fitness function. So I give an example of volatility. If you talk to someone who invests in equity, their target volatility is probably more around 10, 12%. If we look at a fixed income investor, more around 3, 4%. In the questionnaire, if we know the person is a young person, they might look at a higher volatility for their portfolio. If the person is more near retirement or very risk averse, they will look at a lower volatility target. Same for return and so on. So first, the fitness score, like the volatility fitness score, needs to be adapted to each investor. And in addition, we can modify the weight to take into account their preference. So how we integrate new data in Iago? So let's take an example of what we did with Report Brain. So we get this data from Report Brain telling us, well, we can add a sentiment score, for instance, or a sentiment tag to a number of stocks. So for us, the first step is to convert the data we get from Report Brain into a number between 0 and 1. That step is important and sometimes is overlooked, but it has a big implication into your results. The second part is to define a portfolio score. So generally, in this case, will be just weighted by the NAV. So if a stock is like 20% of your portfolio, do 20% multiplied by your score, and you do a linear average weighted by the NAV, by the value of your assets. And then we need to define the weight. And typically the weight will be done through a question. So for instance, there is a choice to be made. We ask the question, is ESG or is it the market sentiment important for you? Yes or no? If the answer is no, then the weight of this fitness function will be 0. It will be ignored. That's me. Whereas if the answer is yes, we can decide to put it at 30%. So there is several steps of modelization to represent how an investor saw his investment. And when you look at concepts like diversification, it gets a bit more complicated because not everyone understands diversification in the same way. There is not a standard definition of a diversified portfolio. Is it the number of assets? Is it the weight of the assets? and so on. So even diversification is a concept that's not well defined. Okay. So using this approach, our algorithm is able to handle all type of asset, equity, bond, fund, derivative, structured product in a unified way. We support multi-currency. So in the context of this project, we focus on the European region, so all in euro, and we focus for the demo account, the testing account, we focus on European stocks, but we could do fixed income, we could do FX product, we could do fund. Fund is one of the big investment, and mutual fund is one of the big investment assets. And we had it fitness function, taking into account volatility, return. That's traditional, but also things like asset allocation or model portfolio. How much allocation you want allocated in equity versus fixed income. That can be deduced from the previous UI Pablo showed earlier. It could be ESG score, and we're looking to build the technology to be able to add as many data that can be used in an investment decision. If we look at the regulation around Robo Advisor, when regulators look at Robo Advisors, they usually ask these tools to take into account good practice of portfolio management, but also the investor preference. So if the investor prefers certain market, like emerging market versus mature market, Europe versus US, these kind of things, into the Robo Advisor, not just to make a black box to make money by magic. Transparency is a very important aspect. And I think over the last few years, the market understood that investors nowadays want transparency, want to understand what they make money or lose money, versus a black box who make money by magic. Before we move to the demo, is there any question around the idea I just presented and our philosophy and approach around our tool? So maybe if I take back the previous question, are big data technology enabled in this step? Not directly, but if we get through big data some scoring like report brain, we're happy to integrating into our process. But we don't use big data in the way that we suddenly learn and get better investing, because we believe this approach doesn't really work in practice. It's a more philosophical approach here. In terms of AI ML, we're using the genetic algorithm, we could go in detail in another session, that actually behave like a mini AI learning to build a portfolio in few seconds, to represent the same way an investor will learn to build his good portfolio based on experimental building. And each time we optimize, the AI can get recalibrated to the specific investor preferences. If there is no question, maybe Pratush, do you want to do the demo?
Yep, sure. Let me just share my screen. Hi, everyone. Is my screen visible?
Yeah, all good. If you can zoom just a little bit, otherwise good.
Okay. Just to give some more background on this, on the previous system, we've developed the AI Portfolio Optimizer, or AI Go for short, which makes use of market data as well as user inputs, which can be populated on our database itself. And for the purpose of INFINITECH, the Privé APIs will be provided to fulfill the pilot. So these APIs can be provided for the project as well as our partners for any requirements. So this API follows a standard JSON schema, which can be seen in one of the tabs. We can leave that out for this point. What I want to add on is what Julian mentioned regarding modernization of the investor preferences. So I will go more in detail on the different scores that I use and the user preferences. But just for giving you a brief idea of the spreadsheet, let me say that on the left-hand side, in columns A and B, you can see user preferences, whereas in the middle, from columns F to H, you will see the generated portfolios. So as part of this Google Sheet, when we run the optimization process, it actually sends an API to our system, and the optimized portfolio is generated and the statistics are populated in the sheet. So let me first start off with a few simple examples. So consider that I am a new investor and I go to a bank and I want the advisor to create a portfolio for me, but I do not have any preferences. The only preference that I have is I want my portfolio to be maximized in terms of a Sharpe ratio. So in that case, the API utilizes the 100% weighting of the Sharpe ratio in the request, and we optimize the portfolio based on an investment universe to give the allocations and assets so that this Sharpe ratio is optimized. So in the case of in this case, we are optimizing based on the Euro Stocks 50. So we're using all the 50 stocks in this index to optimize to give us a portfolio that matches the requirements. So in this case, when we optimize based solely on Sharpe ratio, we see that our total portfolio score is 100%. That's because we've reached our target of fulfilling the 100% on the Sharpe ratio itself. At this point, we don't. The investor does not have any preferences in terms of the maximum volatility that he wants in his portfolio, or any preferences on the number of assets in his portfolio. So if we move on to a second investor, so the second investor has different priorities. He's still interested in maximizing his portfolio based on a Sharpe ratio, but he also wants more assets in his portfolio. He wants it to be more diversified into different assets. So in this case, he has put a 50-50% importance on both of these factors, which can be seen here. And based on the genetic optimization process, we are able to generate a portfolio to maximize the Sharpe ratio as well as diversifying the portfolio. And this diversification is given a score as well. And we see the total fitness score is 82%. Consider the same investor, but instead of keeping a focus on diversifying his portfolio, what he wants to do is he has a risk level. So as Pablo showed before, we have a system for calculating the risk profile of a client. So this risk profile can be used to make sure that the portfolio proposed does not exceed the risk level of this client. So he has an equal importance on maximizing the Sharpe ratio, but at the same time, keeping the volatility of the portfolio lesser than 12%. So here we see, according to the modelization, we are able to optimize a portfolio and propose a portfolio which satisfies the Sharpe ratio score, as well as has a volatility of 11.99%. So it's not exactly 12, but it's right about there. And we have a total fitness score of 99. So that would be 99% out of 100. For the next part, we bring into question the sentiment, the market sentiment on a particular asset. So as Alex mentioned before, we are able to retrieve this sentiment data for each asset from using the APIs. And for now on our system, we've just included sentiments for all of these assets as sort of tags. So we've tagged our assets as positive or negative or neutral. Based on these positive, neutral, and negative, we have given it a score of either 1, 0.5 for neutral, and 0 for negative. So in this case, we have an investor who has a risk level of 16%. That is, he does not want his portfolio to breach 16% in volatility. He also has a slight importance on maximizing the Sharpe ratio. And at the same time, he wants to make sure that the assets in his portfolio have a good market sentiment. So in this case, when we optimize the portfolio, we have a portfolio that matches all the requirements, and we have a total fitness score of 1. As you can see, the volatility is 15.97, which is not being breached. It has quite a high return, and we managed to maximize the Sharpe ratio here. So if we consider the same investor, he might later on say that this proposed portfolio just has 2 assets in it, which have a positive sentiment. So maybe he wants to diversify it a bit more. So if we take a step back and use one of the diversification factors as part of the modelization, we can include this as a user input. So he puts a little importance on diversifying his portfolio, and at the same time, he's making sure that all the assets have a positive sentiment in the market, as well as the volatility cap of his portfolio has not been breached. So here there's a more diversified portfolio which is being generated, and the total fitness score of this portfolio is 0.94 out of 1. Yep. And just going ahead, we can see that all of these.
Maybe, sorry, can you go back before? Maybe just to do, but is there any questions so far from anyone? Okay. So I'd like to highlight something, because that's a topic who came a lot from the regulator, is the transparency of why this portfolio got selected. And if you can highlight the individual fitness score, Pratush? Yeah, all that section. So our tool also allowed to understand why this is a good portfolio, which fitness function get maximized. So in some case, we're not able, especially for certain, when the asset universe get much larger, we might not be able to fulfill all the fitness functions. That's mean investment is also a compromise between, I want the lowest volatility and the highest return. And how we explain this compromise to the user. So through the ability to explain the fitness score individually, we also explain why this portfolio is selected, what is it maximizing. And sometimes you can see, well, you get this portfolio because 3 of our 4 factors get maximized, but not the last one who cannot get fulfilled. Because what you're asking might not exist to be built with your asset universe. So transparency here is very important, because we're not just saying we magically find a solution to incoherent requirement or inconsistent requirement. We say, well, we do a compromise, and you know which compromise we made between the different fitness functions. So the investor at the end know exactly why this portfolio came from, and may not decide to go it. He said, no, for instance, I find the Sharpe ratio, I realize, is way more important. So we can increase the weight to the Sharpe ratio and do another optimization if that's not the result the investor look at it. And we learn also from experience that it's not very clear when people say, well, I want low vol, high return, what they mean. Up to which point are they happy to compromise volatility versus return? And that's something that needs to be calibrated based on user experience. Yeah, thanks, Patu.
Yep, thanks for adding on, Julian. So just to add on to what Julian just mentioned, it's each of the investors have different preferences, which will in result give you a different portfolio with different risk and performance. So here we can see the performance and risk for each of these portfolios on a risk return graph. And they have no relation to each other. All of them just indicate the preference of each investor to certain different requirements. So moving on, we can see over here we have an example where we have a preference, a 70% preference on reaching a certain volatility target, while there's a 30% preference on diversifying your portfolio. This is so that there's no high or low concentration of any asset in the portfolio. And as we increase the volatility target of the client, that is, their risk level increases, we see that we reach the total fitness score and it converges at quite a low level. That is because once all the assets available cross a certain threshold of volatility, we are able to reach the fitness score that is required by the client. And also based on some research that we've done before, we found that the optimization process is actually comparable to the results that we get through MPT or any other portfolio models. So we're able to recreate the efficient frontier through our model as well. Julian, would you like to add on to this?
So maybe to conclude a bit our approach. So first we can represent the traditional optimizer like volatility return, and we can reproduce concept like efficient frontier. So what we're bringing here is a framework when we can improve the modelization of the investor beyond just the traditional volatility return Sharpe ratio method, where in fact an investor, when he gets the future, and I go back to the introduction, in fact can look at factors that are non-financial, such as ESG score, such as theme, such as sentiment, and so on. So we build a framework to be able to easily add all this data to the portfolio construction process and still keeping performance in under 10 seconds to reach a result that can be explained. So that's really what we bring. We have more and more data available on a digitized format and now available in more database. We see more and more data available compared to 20 years ago. And we can leverage that to improve not so much, I would say, the pure success of I'm going to beat the market, but to be able to represent much more how the an investor today look at the market. Just to reiterate. So, and as I say, now, if you ask someone, where do you put your money? They will talk about Asia versus Europe versus emerging market versus US, technology versus medical, for instance, maybe talk about inflation, talk about also good practice around diversification. How do we take all this input into a consistent framework? And that's been our added value to the world of portfolio optimization. And in addition to what, to reiterate what Roland was telling earlier, right now, most retail investors have not access to this process because a relationship manager will take 6 hours to do it. We make quite a few of them, and they all say, well, I only do it for my big clients. We allow to use the same approach they would use when they construct a portfolio by hand to a way wider set of investors, and at the same time guide them through concepts like think about volatility return, risk, diversification, and so on. Any question or comment on our results?
Okay.
Yeah. Maybe in terms just next time, just to do transition run. So for us, the next say what? Continue to add more fitness function, more flexibility in terms of fitness function, to be able to incorporate more data. And maybe if we see part of this project, more data provider, financial data provider, we're happy to try to integrate them into the process. We also gave you guys, to our partner, access to the API for you to test it and see, maybe build your own customized journey around it while we're building our own version of what will be the user experience we want to show to our user. Yep. Thanks, Ron.
Okay, thank you very much, Julian. Before I hand over to Pablo again, just one iteration here is, especially Julian mentioned now in the end, that all the, let's say, the business intelligence behind here will also be not only on the UI we have seen in the beginning, also be available via API access, yeah, because the experience here in the market shows that, of course, potential smaller projects and smaller customers will use a predefined UI, but the bigger the banks, the financial institutions, insurance companies, asset managers they get, yeah, they will build their own UI UX on top of that, yeah, because that's depending on different regulations in different countries, different business approaches, discretionary trading via advisory, via asset management approaches. And to fulfill all these needs for the different market participants, yeah, this is most probably the crucial part, that then there is the whole journey you have seen, and then the algorithm sphere available via APIs as well, where then potential partners, either inside from INFINITECH Project Consortium or also potential customers outside from the financial services industry, they can have then access to this kind of tools. Yeah.
One question about this API. So you said that it will be available for the partners to, I guess, to test it, but this means to test it with the actual data that you have inside, with the assets that you have included, right?
Yes, any kind of test environment from our side will always contain, let's say, a good set of data from different asset classes, equities, bonds, investment funds, ETFs, but of course not the complete globally available universe, because this again will also be very much dependent on in which asset classes the potential customer is mainly interested, or for example what we had here today, because Report Brain for this, let's say for this first integration, wanted to focus mainly on the Euro Stoxx 50 equities, and therefore the selection which we have seen today was exactly these 50 equities. Yeah, but this will be a typical approach. Yeah? We will have customers which are only doing investment funds, and then you need a fund database behind the tool. And if others say, no, I'm not interested in funds, I only take, I don't know, equities and bonds, then you most probably will have then in real life only equities and bonds. Yeah, because it's all in the end dependent on which asset classes the potential user, broker, bank, asset manager, he really is trading in. Yeah, because it makes no sense to create proposals containing products / asset classes where then the advisor or the asset manager cannot execute the transactions. Yeah, that would not make sense. Yeah.
Okay. And this API is documented in some way in order to...
Yes, we are planning and already building up an API website where after NDA and so on, let's say technical guys can have access to and can make their first API calls against this REST API. Yeah.
Okay, perfect.
Okay, so then let us move on to the next part. Let me share my screen. And I believe the next topic comes from Athos. So I will hand over to you, Nuria. I believe you're on the call. Yes.
Yes, I'm here. Hi, everyone. Good morning. Well, at this point, we are going to talk about potential enhancement here in Pilot 4, which is by introducing duos, that is digital onboarding authentication, as a method for using virtual identities inside this pilot. Next slide, please. Well, here we are going to talk about an introduction about what is Duos. We are going to talk about 2 steps that we have. The first part is to create the virtual identities, and the second part is to use them to authenticate. Later, we are going to talk about the APIs and the blueprints of Duos. And then we are going to see how could be the potential integration of Duos in Pilot 4 and the interfaces in this Pilot 4. Next slide, please. Well, in INFINITECH, Atos has introduced Duos through the data governance mechanisms. That we have several data governance mechanisms in this project, and one of them is Duos, and we are potentially going to use in this pilot. Duos is digital user onboarding system. It's a solution for dealing with virtual identities in a mobile device. It provides remote user registration using several identifications, using electronic identification or a passport. With this solution, we can have various identity proofing and verification services that link new users to the identities that we have created. To do it, we have verification of the electronic data stored on the chip of the electronic identification. We have also a verification of machine readable zone that is captured and check if this is correct, and also that it is not here a face recognition to check if the person that is storing this virtual identity is the person that that the electronic identity belongs to. We have flexible multi-factor authentication for different users or identities, and we can also have an integration with different IAM systems for posterior authentication. Next slide, please. Well, here we have the first part of the use of this application. The first part is to create the virtual identity. Okay, so in this case we have our mobile phone, and now the first time we use Duos, we don't have any virtual identity inside it. So we click on create the virtual identity, and we select to use electronic DNI or passport. Okay, so after that, we the application reads the MRC zone, and next it reads the chip and check if both parts are okay. This is the part of document reading. After that, we have a part of biometric acquisition, in which we capture the face, and we check if the face that we have captured is the same that is stored in the chip. Okay. After that, we can have an extra check, which is with ADAS. Okay, a verification in which we would check if this identity is real. Okay, and after that we have issued the virtual identity. This is the first step, and at the end of this step, we would have in our mobile phone, in Duos application, this virtual identity created. We can then create another virtual identity with a passport, for example. Okay, so this is the first step. Next slide, please, Pablo. Well, the second step is to use these identities we have stored in our mobile phone. And for example, one of the uses we can have is, for example, a bank application that is needing an identity check. So in this case, we go to the to the identification, and then we jump to Duo's application. When we are inside Duo's application, we select the virtual identity, one of the virtual identities that we have stored previously in the first step, and then we read the QR code that the application, the bank application in this case, is providing. This QR code will allow us to will allow Duos to communicate with the origin application of the bank. Okay, then we have the step of face recognition to check if the person that is using this virtual identity is the same that belongs to this virtual identity. And then we have, if this is success, we have the login. And then we jump again to, we return by using the QR code, we return to the bank application. And we continue in the bank application doing the things that we were going to do. Okay, next slide, please. Well, regarding the APIs, in this case, we have the Duos application, and in the part of virtual identity creation, we would have a request for creating the virtual identity. Then we have the virtual identity creation result, and then we have the user input to confirm that the data are okay. And after that, we have the response in which we have the result of having created the virtual identity. And in the other step, in the step of the authentication, we would have the authentication request. We have to select the identities, the identities that we want to use in this case. And then we have the result and the return to the application. Next slide, please, Pablo. Well, regarding the blueprints of Duos, this Duos application should be installed in a mobile device, and it's needed to use electronic identities used by European national authorities according to the EID schemas. That is the EID cards or passports. Regarding the architecture, the adapter would interact with the end users, for example, through the bank application that could need user authentication, and with the end user that supports EID cards and passports. Next slide, please. Well, let's see how could be a potential authentication inside Pilot 4. This is a case in which the customer demands an authentication in this pilot. Okay, if a customer that could be an asset manager, a bank advisor, or an advisor company requires as a precondition the identification service for new retail customers, Duos in this case could be integrated in a real customer application. Okay, based on that integration, the asset manager would provide the new retail clients a personalization service for their investment and would provide a portfolio optimization. And the retail customer would be registered in a portal that would be defined by the bank or the asset manager or the advisor, so that they could access to the data. This customer onboarding solution would call then the Duos application if this is licensed by the customer. Okay, let's see next slide, please. Well, here we have a potential flow diagram in which the first step would be that the customer requires as a precondition the identification. Okay, so the portal in this case of the bank application or would offer a mobile identification through Duos, using Duos. The second step would be that this portal would show a QR code that would be captured by Duos application that is in the phone of the customer. Okay, then we take our mobile phone and we open Duos and select one of the virtual identities we have stored previously. Then when we select one of these identities, we read the QR code from the customer onboarding portal that firstly I described. Then after that, we have a step of face recognition. And then if we have a success authentication and identification, we will obtain some data that we have obtained from the chip and from the MRZ zone. That could be, for example, the name, the surname, the ID number, the date of birth, all this data. And all this data would be would be sent to the customer onboarding portal that previously we opened, and we capture the QR code, which contains the URL to call a web service, providing all this data that we have obtained by using Duos. The private application would receive the successful identification for the customer and would take the ID data provided by Duos and transport them to the data model. And this would be the potential flow diagram. Okay, next slide, please. Well, the Duos interfaces in this case would be when customer onboarding in the direction to next use Duos, we have the QR code, as I told you before, that is provided by customer onboarding portal and contain the URL of the web service and a token that the customer onboarding portal will that Duos will use to return to the customer onboarding portal that is waiting for the response. After that, as a second interface, would be that Duos performs the authentication, and when it's successful, Duos uses the URL and the token that capture in the QR code and calls the web service and sends the necessary data that would be required to use the application, the prepaid application, such as name, surname, the identity card number, and the birth date. And I think that's all. If you have any question.
Okay, then thank you, Nuria, very much.
Thank you.
Okay, yeah, so thanks a lot, Nuria. So let me then just continue. So, okay, so basically here we're finished. So we wanted to make a quick recap summary for the pilot. So do you want to proceed here, Roland, for this part?
Yes, please.
Yeah.
Yeah, I think as a quick summary, if I may start, I think we started with the goal for the pilot. This was mainly this personalization of investment advice with different fitness factors where we definitely need to continue to work on, because this is in the end, to say directly, indefinite work, because different customers will go for different fitness factors, and that's very much demand driven. To have the journey for the risk profiling along with regulatory requirements. I think this was also the question, if in this risk profiling also AI or machine learning can be used. That's a little bit in conflict with what regulators want, because regulators always want to be able to reconstruct why a certain risk profiling came to a certain result. Yeah. And there you need to have your own, I don't know, matrix or however you call it, that you say, okay, I have my 5 questions, 10 questions, whatever, and they have this and that weight, and then the risk score was defined as it is defined. Yeah. And therefore, this is a little bit more under, let's call it, under regulatory pressure. We showed a little bit about the integration of, let's call it, the non-traditional data, like the data excerpts which the partners from Report Brain would do, which I think can be really added value in total, also for the future, that it's not only the classical market data the whole industry has now for 30, 40, 50 years, but also this new, let's call it, social media based and other kind of non-traditional data. Yeah, and then we tried to bring this in a quite of a simplified UX, yeah, because financial services industry is anyway in most cases a little bit too complex, and therefore one of the major tasks here is to bring these complex processes and complex calculations down to a simplified UX. The current status is, as you have seen, risk profiling is in the end nearly completed. There will be some refinements and some bug fixings still ongoing. The optimization is already, as you have seen in this spreadsheets, technically and mathematically working. And there we will have to finalize the work quite soon. And the next steps will be, as also Julian from our side said, that, of course, this further improvement of the fitness functions together with Report Brain, modernization of investor profiling, then, of course, further analytical UI for investment proposals. That what was also one of the parts here that we have here. Analytical functionalities, like if a customer wants to see one portfolio compared with another, that he can see this, what is the difference in terms of different key figures. And last but not least, what was mentioned also, that of course most of the optimization logic shall be available also via APIs to offer this to third parties if this can be integrated. And that will then also be including what can be added then by other partners, like from the content side or from the prolongation of the user journey, like the Duos module. If a customer says, okay, I want to have also this identification process even before I enter a new retail client within my system. But that depends, as also mentioned, very much on the setup the banks or the potential customers themselves have. Yeah, I think this is a quick summary. And now, of course, we are happy to answer any kind of questions, remarks, feedback, whatever will have for us here. Thank you very much to all the presenters from my side, and all the listeners. Hope you got a better impression what is the current status with Pilot 4. Thank you very much.
Hi, this is Ernesto. First of all, thank you for this workshop. I followed, not fully, because I was after other things, but maybe I grasp the basics. So first of all, I congratulate with the status of this pilot. I think is going to be one of the relevant in the project. However, let's see from the point of view of the reviewers, of the, let's say, of the commission, okay? Now, if I understand this pilot, I would look for how big data and analytics are involved. And you explained that you have risk profiling, algorithms, and so on and so forth. So the emphasis should be, but probably you explained better than I was following, the emphasis should be how we improve this function in this retail market towards our customers using innovation like this new algorithm. So the way to present, at least within the project and within our next GAN review especially, is that we put a lot of information technology there, analytics, analyzing big data to improve the way the customer will have services in portfolio management. That should be the way we have to present not just this pilot but all the pilot. Of course, it has been described in that way, but in some way under the lines, not with a big emphasis. I will really recommend you to put much more emphasis of the innovation of this portfolio management, and how, especially how the people, how the customers will trust this kind of management, which should be better than the other traditional approaches. Why they should, let's say, be confident that the security, the performance will be better. Probably I missed something and you said it, but I would like that you will really stress during the presentation these topics. Sorry, please, Roland.
Yeah. No, very, very good hints, Ernesto. Thank you for that very much. I also made the notes and will share with the team. Yeah, that's clear. That's if you want to see it from this innovation part, okay, why is this solution what was developed better compared with let's say with the traditional portfolio management offerings out in the market there, then we need to put this more on the top of the message. Yeah, that's no doubt about that. Yeah,
yeah
today it was more to describe how we are. Yeah, and now we can. Yeah, and now we can go ahead, and there you are completely right. Go ahead and say, okay, where is really the, as it is always said, the added value, which is done here? Yeah.
Yes, thank you. I think you've got the message, and probably it was said, but in some way, consider that the people funding this project are from the big data, let's say, network, or for the analytics, also for other. So they will say, why using big data is improving over, let's say, reducing, or so. This should be highlighted, okay?
Yeah.
I've said it all, and I think you have got it. So I thank you so much, everyone, for a presentation. I have to leave, of course, but again, I think you are one of the better shaped pilot in the project. Thank you again. Thank you all.
Okay. Thank you, Ernesto. Okay. further questions, remarks, feedback? Okay, if anybody is speaking, everybody is on mute, I see here, but if no further remarks, questions, then once again, thank you very much for everybody who has joined today. And yeah, we anyway potentially hear each other in the next 2 days during the General Assembly. Yeah, anyhow, yeah.
Yeah, probably there are no questions. Pretty straightforward. It was very, very well presented and clear, I guess.
No. Yeah, for me it was very clear, I have to say. Very nice presentation. Maybe following what Ernesto said, but this is something maybe for other days during maybe. Well, but this is something the same for all the pilots. It's something that we have to see how to present it. Is to also give the vision of okay, because your pilot is it's great, so that the demonstration is very good. But we also need to show how INFINITECH is helping you. So what are the parts of INFINITECH that you are using? What themes? That's all. Is to say how INFINITECH is helping to implement this this pilot.
Okay, then thank you very much again. John, would you make some closing words or shall we just close?
John is very quiet today.
Yeah, okay. Oh, obviously. Yeah. Okay, no, then thank you very much, everybody, and have a good day. And hear you potentially tomorrow then, yeah?
Okay, thank you. We'll see tomorrow, yes.
All right, thank you, Roland. Thank you so much.
Thank you very much.
Thank you.
Thank you very much.
Have a nice day.
Cheers, bye.
Thanks everyone.